Hello, and welcome to the Investor Guys Podcast, the ultimate podcast for serious real estate investors in the know. Join your host, Bill Barnett and Kevin Mills, as they share their expert insights, strategies, and tips to help you succeed in the world of real estate investing. Get ready to level up your investment game with the Investor Guys Podcast. And now, here are your hosts, Bill Barnett and Kevin Mills.
And welcome into the Investor Guys Podcast. I am your co-host, Bill Barnett. This handsome young man over here is Kevin Mills. Good morning, sir.
How are you doing today?
I'm doing terrific, man. It's always a highlight of my week to do these. We've been doing these. We're 240 or 30 or whatever the number is now that we've been doing this. Love doing them. You and I have been together, since
forever.
90.
Yeah.
A long time, and it's just a hoot. So welcome in, everybody. We're glad you're here. Make sure you share the podcast with your friends. Hit the like, hit the subscribe, do all that stuff that everybody on YouTube asks you to do, and we're going to be no different on that. And I ask you to do that. And you can also reach out to us if you have any questions, if you have any show ideas that, man, I wish those guys would really cover this. You can get to us with Kevin at Investor Guys, plural, InvestorGuysPodcast.com, InvestorGuysPodcast.com, or me, Bill, at InvestorGuysPodcast.com. We love all of that stuff. We love answering your questions. We love show ideas. We're here to help you be a better investor, a better informed investor, tell you about what's working with us, what's going on, what to look at in the marketplace. And so this week, we decided that, this is a topic that rolls around pretty regularly because everybody's always looking at funding. How do I get funding? Where do I get it from? How do I structure it? And so as an investor, you're always going to need more money. You just can't get enough. I love, I'm going to talk about Donald Trump. I worked for Donald Trump for 3.5 years. I think he's an absolutely amazing man. If you're not a Trump fan, you may not want to be here because you're an idiot. Because, those of us that have some form of relationship with him, just knowing to be an amazing individual, guy that cares about people a lot, one of the most unracist people I've ever been around in my entire life. But anyway, one of the things that I learned from Mr. Trump was you always bring partners in on the deal. Now, a partner can just be a funding source. Could it be a mortgage company? Sure. Could it be a hard money lender? Sure. But you always have somebody that's involved, because if you're trying to fund your deals solely with your money, well, I'm just going to say this way. Donald Trump is worth, between he and I, we have about $7 billion worth of asset. Okay, so most of that $7 billion's worth of that $7 billion's on his side. We talk about, you got to bring partners in, because if you're using your own money, you're going to run out like that, because these are not small ticket items. And to spend $1 million on a piece of real estate in these days is absolutely nothing. It's just a very common event. And then when you start playing in apartment buildings and commercial real estate, you're going to hit multi-millions again like that. So I got to know, where can I go to fund my deals? So we're going to talk about, probably for 2 or 3 shows or more here, we're going to talk about financing options, funding options. How do I do it? Where do I get it? What does it look like? What's it cost me? So, Kev, there's basically 3 different types of fairly encompassing types of funding. So you got private money, which is money that we bring other people in on. We got traditional mortgage money, which is, you go to B of A, if they're still around or not, and go apply for a mortgage. Or then you also look at hard money. So I've always been, other than my personal residence, I've been a hard money and a private money guy. So out of those 3 things, where you want to start today?
Well, I want to stress what you started off talking about is partners, and we hear the term money partner all the time. And you need to get outside of that traditional. Unfortunately, this stuff is not taught in school. Okay, you need to get outside of the traditional mindset of, I'm going to do this. I'm going to build my nest egg, and I'm going to keep investing in more and keep investing in more. You can do that, but you're never going to be big if that's what you're doing, because you're not going to, unless you're already a multimillionaire and you're investing multi-millions in real estate. So if you're a Bitcoin millionaire, or you won the lottery or something like that, then have at it. But for the rest of us, if we want to play on a bigger field, we have to have bigger backing. That means that we go to the bank, we go to private investors, we go to funds, we go to hedge funds, we go to wherever, so that we have the money behind us to make this happen. Okay. And that's really all of those three strategies you just talked about: traditional mortgages, hard money loans, private lending. All of those are coming out of somebody else's pocket. They're not being cash out of our pocket. There really is one other financing option, and that is that we pay cash ourselves for a property. Okay. Which is a whole nother show for a whole other time, because leverage is how you grow when you invest in real estate. Leverage, 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 leverage. If anybody is telling you that you need to be buying your assets 100% cash, they don't know what they're talking about. Yeah. Dave Ramsey's, yeah. And he started off in real estate, or is in real estate now.
Yeah.
Whenever somebody is telling you to do that, that's not your best option for real estate. So again, get out of thinking that you have to do this on your own, that you have to do this the traditional method: grow, 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 reinvest my money, grow, 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 reinvest my money. Absolutely reinvest your money. We're talking about Donald Trump. Okay. Donald Trump gets his funding from the banks. He has great relationships with the banks. That was actually a lot of the topic of this recent court case. They were talking about how he was trying to cheat the banks with his purchase of Mar-a-Lago. The banks funded Mar-a-Lago. Donald Trump is a billionaire. He didn't go into his own pocket and take out his own money to buy Mar-a-Lago. He did it with money from the bank, because his money is working someplace else. Another thing that people don't realize about billionaires don't have billions of dollars of cash sitting in the bank.
Right.
Okay.
Right.
It would be stupid for them to have billions of dollars sitting in the bank, because that money is not working for them. That money is just a target for the government, essentially.
Well, it just evaporates. If you're paying attention to, you'd have to be literally in a coma for the last 4 years to not understand the impact that inflation's had on all of us. And what happens when you're going through an inflationary time is that money just evaporates. So if I have $100,000 in the bank, the buying power of that $100,000 4 years ago compared to today is very, very different. It's significantly less than it was 4 years ago. So I don't want to have cash sitting around. I don't want to have cash. I keep a minimal amount of cash. Now, I do keep some cash, yes, because it is the most easy thing to go to the grocery store and do mundane kind of things with. But I like gold and silver. I like Bitcoin. I'm not a Bitcoin player myself, but I like Bitcoin. I'm big on gold and silver. Why? Because as you look throughout history, those excuse me, those are things that, as we have economies crumble or get in dire straits, and look, our economy is a mess. And why in the world we would want to have the same administration, whether it's Kamala, or Biden, or Hillary, or Barack, or Michelle, why we would want to have this economic theory that the Democrats have in play again is insane to me, that anybody would look at that, because our economy is in massive trouble. And we're going to see between now and the election it get significantly worse. This is not going to be your typical recession. Trump even said, hey, recession is the nice word. We're probably looking at an actual depression, because they have spin us into oblivion. And If we continue down that path, our economy is going to completely collapse, and we're all going to be in a bread line. And so, what happens with your real estate, may not be less, or maybe less significant. But what do you want to be investing in? You want to be investing in assets that are that hedge against inflation. Real estate, gold and silver, and Bitcoin. Now, gold and silver and Bitcoin are much more easily translated into a daily kind of transaction that you and I might have, that might need. I love silver because you can buy it small enough that literally, they're basically $28, depending on what the daily rate is for silver. But right now, an ounce of silver, which is the size of a silver dollar, it's a pure ounce of silver. They run 27, 28, 29, depending on what day you're looking at it, dollars for that. That's something I can easily transact with. And we're going to find, as we get into more of this economic pressure, more and more businesses will take things like a silver coin or a gold coin. And for you and I, that's a much more valuable asset than the paper money. The paper money is what the value is evaporating in. So I can have the bulk of my assets in real estate.
And we're up on a break, but we're gonna continue this topic when we get back.
ReallyKevin.com. Weekly recorded coaching sessions. Learn, grow, find resources, opportunities, and more. You'll find it all at ReallyKevin.com.
Thank you for watching the Investor Guys podcast.
Absolution X, limited editions, lifestyle apparel like none other. Get yours today at absolutionx.com.
Live the resort lifestyle every day with Cayman K. The perfect pieces for every wardrobe. Shop the entire Cayman K collection and find your favorites. Find all our styles at caymank.com.
All right, we are back and we're talking financing strategies. And again, before we went into the break and before we got off on silver and gold, if you're going to do this, you're going to need money backing. So through one of my real estate companies that I have, we are doing multiple transactions throughout the course of the year that are 110, 120, 140 million dollars. That money's not coming out of my pocket. That's not sitting in my bank account. Okay. That's money that we're transacting with. Now, that's not to say that I have $110 million. I control that asset. The bank actually owns that asset though. Or whoever put up the funding for that particular asset. I would not be able to do that on my own. I'm going to make that clear. Without having some sort of financial investment behind me, whether it's a bank, whether it's a fund, whether it's loans that I would qualify for, I would not be able to do those deals. That means I would not be able to make money on those deals. I am taking, we just used 110 as an example, taking $110 million of somebody else's money, okay? And I am investing it in something that is a solid real estate transaction that is going to return money to those investors and to me. Now, the best part of each one of these strategies, if you do it correctly, and again, it goes back to the numbers, okay, and how you set things up. If you do it correctly, you are making money on somebody else's money. So Bill and I, we take that money that we make and we reinvest it in different things that we're doing. It could be our favorite project car that we were just talking about, but that is an investment. It could be that we want commercial properties in the area that we live in because we like being able to frequent. One of the things I love having, if I live in an area and I have commercial real estate, I will patronize those people who are renting from me. I will go to those restaurants and I will eat. I will go to that barbershop. I will get my haircut. If that's something you want to do, invest in commercial real estate. Vacation properties. We love vacation properties. We use our own vacation properties when we don't have people sitting in them. Whatever it is you want to reinvest your money into, reinvest that money into those projects. Make those your passion projects. The money that we make from these bigger projects, we would not be able to make unless we were borrowing the money through hard money, through traditional, through a lender, through a fund, through any other strategy. But each one of these strategies is somebody else's money. It's not money out of our pocket. And if we were reliant upon money in our own pockets, we would not be able to do this game. Okay. Most people would not be able to play in the real estate game. We did a show. I'm going to just do that real quick and I'm going to toss it back over to Bill. We did a show. It was called 30,000% ROI plus on somebody else's money, and you can do it too. And that is exactly how you want to do it. We calculate our return on investment for our own money, but imagine if we put in less money and somebody else is putting in more money, but our returns are still the same or greater because we used that strategy. And we need to think smart. We're not taught this, and we're not teaching this. We're not teaching this in college. We're not teaching this in school. We're not teaching this anywhere, unfortunately. And it's something that we need to learn, because this is how we build real wealth. This is how we grow real wealth, is by having a portfolio of wealth. Go ahead, Bill. I'm sorry.
No. I was interrupting you. Sorry. So, and before, as a listener, before you roll your eyes and go, oh, yeah, right. Go back, go to investorguyspodcast.com, investorguyspodcast.com. The archive of our 200 plus shows is right there. Straight off the top of my head, I don't have the show number.
You give me 1 second, and I'll be able to tell you, because I actually have a list right here.
We'll give you that show number, but go back and listen to that and avail yourself to all those past episodes and start listening. If you're new in the game, go back and pick up one a day. They're typically 20, 30 minutes. Go back and listen to one broadcast a day. There's always going to be information in there about how to successfully invest, because both of us have been doing this for over 30 years. And, there's a lot of experience in there. And so we like sharing those experiences, and we're both still doing them as well currently. That's my fiance asked me the other day. She's like, when are you retiring? And I'm like, hey, excuse me? She's like, when are you retiring? I'm like, retiring from what? She said, well, from real estate. I'm like, when they lower me in the hole, I guess, but not before then.
Yeah, but you're still going to own that real estate too, Bill.
Yeah, she's like, why do you ever get tired of that? Don't you ever get tired of it? And I'm like, no, I actually don't. And she's a real estate agent. I know there's a shocker. She goes, well, I get tired of it sometimes. I'm like, that's because you're on that side of the world. And if I were on that side of the world, I might get tired of it too. But on this side of the world, it is just too much fun. And there's no reason to ever retire. And I haven't seen anything legal that you can make these kind of returns on day in, day out. So why in the world would I do that? I don't have any intentions of doing that whatsoever. So the crux of making it go forward is, how do we fund it? So if we look at, let's look at the least resistance. So both of these have little to no resistance to using these methods. So we'll talk about hard money. We'll talk about private money. Let's talk about hard money. In your town, I don't care where you are. Don't care where you are. You could be out in the middle of the Ozark Mountains and you live in a town of 2,000 people. I grew up in West Point, Mississippi. We moved there in the late 50s. There were 8,000 people there. I was like 2.5 or 3 when we moved there. And 8,000 people. We moved back to Birmingham, which is where I'm from, going into the second semester of my freshman year in high school. There were still 8,000 people there. My middle brother stayed there. He died about 3 years ago. Go back to his funeral, saw some people I had gone to school with. There's still 8,000 people. That's it. But guess what? There's hard money lenders in West Point, Mississippi. So wherever you are, there's hard money lenders. There's hard money lenders that do stuff nationally. There's hard money lenders that do stuff just in your state. There's hard money lenders that are just local. There's hard money lenders available. The power of the hard money lender, and yes, that money's a little bit more expensive, just is. But is it more expensive than not doing the deal? Heck no. You come out way ahead, and you have a partner. You have somebody that's going to look at your deal and evaluate it for them, to protect their investment, but they're also going to tell you, hey, this is a great deal, or hey, I think this deal's too skinny to move forward on, and here's what. I think you're overpaying on the front end. I think your rehab budget's due. Whatever it happens to be, and most of the time it's overpaying on the front end. But they'll tell you where the flaws are in your thinking on whether this is a deal or not. And that's invaluable because they do, even the hard money lenders that I use, as long as I've been doing it, they're way ahead of me in the number of deals that they do. Why? Because they may be dealing with 10, 15, 20 investors at a time, week in, week out, boom, 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 boom. And I do a lot. I don't do that much. I got 7 deals going on right now, all single family deals going on right now. That would be a terrible month for them. That's a busy time for me. It'd be a terrible month for them. So their experience in evaluating, a lot of times they don't know how to do the deals the way you and I do, but they do know how to evaluate the potential of the property. And so use that experience and ask them a lot of questions, especially when they turn you down. You ask questions and your knowledge will go up tremendously. We're bound to be closing in on a break.
We are right where we need to be. So perfect timing. We will be back in just a minute after this break.
Thank you for watching the Investor Guys podcast.
Live the resort lifestyle every day with Cayman K. The perfect pieces for every wardrobe. Shop the entire Cayman K collection and find your favorites. Find all our styles at CaymanK.com.
Absolution X. Limited editions. Seek your absolution. Lifestyle apparel like no other. Only at absolutionx.com.
Awaken your potential and harness the strengths of your inner self. Online courses that you complete at your own pace. Set and achieve all of your goals. Packed with an ever-growing catalog of information, resources, learning programs, weekly recorded coaching sessions, podcast, posts and more to keep you on track for your best life. Because the only person who can guarantee your success is you. www.reallykevin.com.
And we're back. And today we're talking about financing strategies. And, Bill and I have talked about these strategies before. You can check out, countless lists of shows that we have. Now, real quick, I did want to mention our show, 30,000% ROI. That is show number 43. You can find it at investorguyspodcast.com. Show number 43. The title is 30,000 plus ROI using other people's money. And I also want to tell you, show number 1, okay, it wasn't the first show that we did, but show number 1 on our list is turning $50,000, a $50,000 investment into over $1 million cash flow with multi-million dollars worth of assets in your portfolio. You absolutely want to watch those 2 shows. Watch those 2 shows and then watch the rest of our shows. Okay. Yep. If you can take $50,000 of somebody else's money and turn it into millions of dollars of cash flow in a matter of 10 years, which is what we talked about in the show. I mean, you could do it with 100,000, you could do whatever and reduce your time. And you're talking about having millions of dollars worth of assets that you control and millions of dollars worth of equity in your portfolio at the same time with a $50,000 investment. Imagine what you can do if you use $100,000 from another investor and you invest that and you keep putting it back into your investment strategy, which was what the keynote was of that particular episode. But check it out. Episode number 1, episode number 43. We talked about hard money lending. Okay. And let's talk about traditional lending. And that is, if you've ever bought a home, that's exactly what you've done. You put anywhere from 3% down on an FHA loan to 20% down on a conventional loan or more or less. And you financed it on typically a 30-year mortgage. You may have done a 20, you may have done a 15, but typically most people do a 30-year mortgage. And you make your monthly payments, which are your interest and your principal. Sometimes if you put down less than 20%, you're paying your taxes and you're paying your insurance and everything else in that same payment. You're not going to be able to do that, first of all, sustainably as an investor, but also the bank is not going to allow you to do that. They're not going to allow you to do multiple traditional loans as a real estate investor. You may get away with as many as about 10, but that's about it. Most investors can do about 2 or 3 before the bank says, yeah, we're just not going to do that anymore. It's just not worth it to us. Okay. There's a risk mitigation factor that they have. It's not risky for them, but their numbers inside their box tell them it is. So they don't want to continue to do regular traditional mortgages to a real estate investor over long term. However, they will turn around and flip you and tell you, but we can do this type of loan for you, or we can do that type of loan for you, which is usually more points and a higher interest rate, which is what we're going to pay as investors.
Oh, yeah.
So that goes without saying. We don't need to really spend a whole lot of time on that. The other thing that we need to talk about is getting OPM, and all these are OPM strategies, but getting OPM from a non-traditional source. And that is what Bill and I were talking about before we went into this show. That's going out and talking to individual investors and tempting them with that juicy worm and saying, I can give you X amount of percent of return on your investment if you invest your money with me. I'm going to put your money in real estate, which is going to be secured. You are going to have a stake in this real estate transaction, depending upon how you do it, whether it's a fund or whether it is, them investing straight through the LLC, whatever it is, they have a stake in that transaction. If something goes wrong, God forbid, and we don't even, you always have to factor for it. We don't think it's going to happen, but you always factor. Something goes wrong. Bill steps off of the curb and he gets hit and he's in the hospital for a month and he can't do what he needs to do. Okay. They own the property and they're able to do whatever they need to do, or they're able to put somebody else in charge of making sure that that property fulfills their expectations as far as returning their money. And that's part of the contingency fund that I have set up for our funds. I'm not the only person who makes these decisions. We've got a board of people who make these decisions. If something happens to me, this business continues on. These transactions continue on. Nothing happens. Okay. It's like just pull my head off and put somebody else's head on. As long as we have money coming in, we are able to do deals. The more money we are able to secure, the bigger and the greater deals we're able to do. Why do you think Donald Trump doesn't buy individual houses and flip them? Why do you think he doesn't buy single commercial properties and flip them? Because he has access to greater funds, which means he's making more money by buying larger assets and holding them and controlling them. One of the things that we would be remiss in this episode if we didn't mention, okay, is equity. All right. We're borrowing money from somebody else. But if we are borrowing this money, whether it's for flips or whether it's to keep these properties for performing assets, okay, we're borrowing money and we are building equity on that property. If our equity is outpacing what we are paying on that money for the term that we're paying that money, then we've got money in our pocket. It doesn't matter whether it's coming from the bank, doesn't matter whether it's coming from hard money, it doesn't matter whether it's coming from private lenders, funds, whatever. Okay. As long as our equity and our return on investment is outpacing what we have to pay to borrow that money, we are ahead. We are putting money in our pocket. And those are the strategies that people like Donald Trump and Elon Musk, and I hate to say it, Jeff Bezos, okay, and Warren Buffett and others understand when they invest in real estate, is that this is a prospect, this is a portfolio that will not only continue to pay you your returns on investment, it grows in value. Okay. And we may never sell these properties, but we have lending power. We can now get more money from these people who are going to give us money because we have this giant portfolio that has value, that has worth, that they know we're not going to default on their little loan for $110 million because we have a portfolio that's worth $1 billion. I don't have a portfolio worth $1 billion, but I'm giving you an example. Why would I default on this when they could come after me for, or my company for the other assets that we have? So it gives us a stronger foundation to just get more money, more money, more money. Start small. Don't go out and get a $120 million loan. Okay. Start small, but build up, grow, and realize that, you know what, within a couple of years, there's no reason why you shouldn't be able to get a $110 million loan. If you've got a good real estate deal, you've got a good real estate transaction, you should go out and try it. Make sure you get the money for it. Don't let these deals pass you up.
And there is a structure to how you ask for big dollars. And the structure typically is, now we've been in it since God invented dirt, or it feels that way. So we're looked at very differently than you may be looked at as a newbie, or as somebody who's only been in 2 or 3, 4 or 5 years. And in those situations, you want to have an operating entity, an operating partner. So if you're doing commercial buildings, you're doing apartment complexes, and you're wanting to buy a $50 million apartment complex, and you've never owned an apartment complex, doesn't matter how good the deal is, they're not going to loan you the money. Now, however, if you go out and you hire, and that's all you're doing is hiring a management company to handle that, and they have a great reputation in the area, they do a ton of business, and they go, yeah, we think this is a great project, we're coming in, here's what we're charging to take over the management of this property. Now, it's a whole different game when you talk to the bank. Now they look at it and go, oh, Kevin, Bill, they're not trying to manage this and operate this. They're looking at professionals that have done this for years and years and years. This is who they've selected. We happen to love these guys. We know who they are. We like their track record. And so you and I become the owners, and that's it. We're not the operators. We're the owners. And that's really where you want to be, in my opinion, because it's a lot more fun and a lot less headache.
Strategic partnerships. And that's what you want to keep in mind, and not just for property management, for anything at all that you can figure out how to make this easier for you, but also more appealing to whoever's going to be giving you this money. And last but not least, and this goes back to the recurring theme that Bill and I have, is numbers, 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 numbers. If the numbers make sense, run the numbers, okay? If they make sense to you and they're the real numbers and they make sense to the person you're presenting the deal to, you're going to have a much better chance of having somebody say, this looks like a good deal, you know, who do I write the check to? And the other thing is start working on your Rolodex, okay? A lot of people get frustrated because they start going to the wrong places for money. They start walking into their local bank and asking the wrong person. They start asking people who they know, who they think have that money, but they don't. So you may know millionaires, okay? You may know multimillionaires, but like I said, they don't have that cash sitting in their bank account. They're not able to just say, you know what, you're right, I've got $20 million. Let me cut you a check for $1 million. It's not a big deal, because they don't have $20 million sitting in the bank. They probably have $100,000 sitting in the bank. Everything is tied up in investments, as it should be, okay? So they go to the wrong people asking for this money, and they get turned down and they get frustrated. Make sure you understand who you need to go to, who you need to speak to get this money. If you're starting small, then yeah, go talk to that multimillionaire, because he's going to be able to give you $50,000, because it's not that big of a deal, because he's got that in the bank. Okay. He may not be able to give you $1 million, because that's going to cut into anything that he does have sitting in the bank, if he has that much sitting in the bank. Ask the right people, have the right numbers, have the right presentation, and once you learn who those people are, you're going to have a short list of people. And the more you take care of those people by keeping your word and giving them the return that you promised, the more they're going to be interested in investing in the projects you have over and over and over again. I can't tell you how many emails I get every single day, people asking me if I have something that they can invest in. So wrap it up for us, Bill.
That's it. So think about, what is the path that I want to go on? And the path that we suggest you take a hard look at is OPM. A lot of different strategies for other people's money, but OPM, because it takes the limitations off of your business. Now, before we came on, we were talking about some things like, I've got a construction bid coming in on buying a strip center that's going out of business. How many of those do you think there are around the country? So
How many
what
strippers?
the bid I've got coming in is converting it to self-storage. What would it cost? Is it more expensive to try to convert this property than it would be just building new? Well, if it is, then bad strategy. Don't think it's gonna be. However, I don't have those numbers yet. So what I'm looking at is, can I buy this strip center and convert it to self-storage and now do that cheaper than it would be building ground up? And the numbers on self-storage work. Not worried about that. It's just, what is your cost of construction and or / acquisition? And so that'll be a show we'll be doing down the road. So we'll tell you how this turns out. So that's a wrap. OPM, jump on the old shows. So go back to show number one. And the other show was 41, Kev?
43, 30,000% ROI on somebody else's money, and you can do it too. So number 43,
number one and number 43.
And you know what? We've got a lot of great shows. While you're on our website, just start looking, decide the shows that you want to watch them. We don't disappoint. We have a great time when we do our shows. We love doing these shows. A lot of times we'll talk about the same topics over and over and over again, but we've got different little gems that we drop in, not intentionally, just because it's different things that we think of or things that we have more time to speak of, on different shows. So even if you're looking and you say, oh, you know what, they've already done a show on this, don't pass on it, because chances are you're going to find something else. The other thing too is Bill and I go off on different directions all the time. So the show title may say one thing and that might be our primary topic, but we may talk about gold and silver. You never know. So thank you for joining us.
Thanks, everybody.
We'll see you guys all soon. Bill, I will talk to you soon. Have a great day.
Thank you for tuning in to the Investor Guys podcast. We hope you enjoyed today's episode. Don't forget to subscribe and stay updated on the latest trends and insights in the world of real estate investing. Also, don't forget to check us out and see all of our episodes at theinvestorguyspodcast.com. Email us, contact@investorguyspodcast.com. Remember, the key to financial success lies in staying informed and taking action. Stay tuned for our next episode, and until then, happy investing.